Then the floor is yours whenever you're ready.
Perfect. Thanks, Jeremy. And good afternoon, everybody. My name is Jordan Euclid with Key Investment Partners. Today, I'll be presenting with my partner, Pete Cannabis.
Hey, everybody.
So really excited to present to you all today a little bit about what the legal cannabis market looks like across the United States, and then zooming in a little bit more specifically on the Ohio market. And so just to give you some quick background on who I am. So Pete and I are two of the co-founders of Key Investment Partners. We are a venture capital fund that focuses exclusively on investing in the cannabis market. Pete and I met about 6 years ago, working for a private equity firm called Partners Group. Very traditional private equity firm, nothing in the cannabis space, more, upper middle market focused. But Pete and I and our third co-founder, to be early, we're all working in Denver, Colorado, which has been the first state to legalize. We naturally saw the growth of the cannabis market by living in that city. And as we started to get smarter on the space, we found that there were very limited pockets of capital investing in the cannabis industry. And that is a thesis that really continues to dominate the story in cannabis to this day, which is why we continue to believe that there are a lot of attractive investment opportunities in the cannabis market more broadly. So before we get into all of that, why don't we take a quick look at why we think the market opportunity has ripened to the point where you're going to start to see more traditional and institutional investors coming into the space, right? So what you have here is just a history of state level legalization, starting with California as the first one to pass medical back in 1996. What you've continued to see is that all the regulatory momentum is consistently in the right direction, right? Where more and more states are legalizing medical, and then of those medical states, more are switching to also offer adult use cannabis. And so we're seeing that, across different demographics, Republicans, Democrats, different age groups as well, are all, generally tending towards the sides that cannabis legalization is the right thing to do and is the inevitable conclusion. It's really just a matter of time, we feel like, for both states to come online and then ultimately for federal legalization to take place. So obviously the question that we get asked most often is, when will federal legalization occur, right? This is, the $1 million question of the industry. If we had a crystal ball for that, we would certainly have a lot more assets under management. But, I think as we really look at the industry today, I think my current view, and Pete, I would love to get your thoughts too, if you feel any differently, is that it's really going to happen in a number of phases, like you've already seen at the state level, right? Where first, the federal government will likely pass something like safe banking, which we think could happen this congressional session during the lame duck session. What safe banking would do would say that financial services businesses that are working with cannabis operators in state legal markets are not in violation of federal law. So that would help to alleviate some of the banking problems that has plagued cannabis historically, would enable some more things like digital payments and that kind of thing. And I think most importantly for the industry, would send a really strong signal to the markets that, hey, the federal government is catching up to the states. They just, are dragging their feet. And then from there, we think there could be some more legalization at the federal level that says state markets are able to decide for themselves whether they want to legalize and are fully legal by the federal law if they do so, but it would still not yet allow for interstate commerce. And that might be something that would be kind of the final step, would be some type of legislation that would open up full interstate commerce. So the long and the short of it is that, it's not going to be some type of flip of the switch event where things open up overnight. There's full supply chains across markets, but in the interim period, you're seeing tremendous growth at the state level, and we think, soon to come more and more positive momentum from the federal level as well. So that's kind of, the high level overview of where things stand from a regulatory standpoint. Now, why don't I pass it over to Pete, who can talk to you all a little bit about where we're seeing in terms of both the demand and the supply side of capital in the cannabis industry today.
Yeah, absolutely. And perfect. There you go, Jordan. That next, or maybe you want to go to the capital constraint. Yeah.
Cool.
So thanks for all that, Jordan. And I certainly agree. I always say, for everyone's benefit, I would say that cannabis legalization ultimately will probably really happen backwards. meaning you're going to have states legalize what is currently federally illegal. You're going to start to see with safe banking, the capital markets open up, public exchanges open up, banking open up. And one day there's going to be a time when it's federally legalized. What that looks like, we don't really know. But the important part is that it will happen when largely across the U.S. there's cannabis businesses operating in most states, nationally. So anyways, to segue into what Jordan, Tibby, and I particularly saw in the cannabis industry that made us really leave our past careers and jump into this full time was an incredible mismatch of capital needed and capital available in the cannabis space. It's important to know this is still very true today. We actually, we really live it and breathe it on a very regular basis. You have a situation, right, where cannabis companies are rapidly growing. Some of them are capital intensive, some of them are not. They all need capital, both debt capital, equity capital, but they don't have access to the broad capital markets that, say, your startup tech investment may. This is largely due to a number of reasons. I mean, you have right on the right-hand side of your side there, you have vice clauses, regulatory limitations that really stop your bigger traditional LPs coming into you call it pension funds, endowments, anything like that. Your big banks are not touching cannabis, and then also there's just a lot of people that won't touch it because it's a vice industry, right? So it kind of gets a double whammy there. It's federally illegal, but it's also a vice industry. So a lot of the same capital that won't touch alcohol or gambling, for example, certainly isn't going to touch cannabis. Anyways, we look at all of this, as you can tell, as one big opportunity. What it's created really as an investment manager for us and our investors is an opportunity to really invest in this kind of perpetual buyer's market. Moreover, today, not only even when in 2021, right, when the Fed was printing money, the stock market was soaring and all of that, cannabis was still very constrained for capital, right, even in that market. But today we're in a bit of a different market than 2021, needless to say. And so the stuff we're seeing now, the point I'm really getting to is what we're seeing today is just exceptional in terms of opportunity, and it's far greater than even what we've seen in the past, right? You have the same cannabis opportunity. It's even more constrained for capital. It's even more of a buyer's market. And we're seeing a lot of these high quality cannabis businesses that we may have liked over the past couple of years, but not invested in due to valuation. We're seeing them come back with secondary opportunities, restructuring cap tables, all different, just even down rounds for good businesses, right? Or even just flat rounds for businesses we've always wanted to be in, but now they've grown revenues significantly over a couple of years, and it's a much stronger business fundamentally, but we're getting it at a similar valuation, so hence less risk, of course. So anyways, a lot of blabbering on my part there, but we just look at the cannabis industry, we say constrained for capital, it's a buyer's market, it's growing faster than ever. Today, it's stronger than it's ever been. And the one thing that has really hamstrung it is it needs a little more regulatory clarification. And once that happens and kind of the doors open, we think we're going to see just an influx of capital, ideally buying a lot of the stuff that we're investing in today. So.
Awesome. Thanks, Pete. And so from here, I'm going to give folks a little bit of some thoughts on, what the investment landscape looks like on both the public markets, and then we're going to dive into two examples of companies in our portfolio that have pretty significant Ohio exposure. So you can also hear about what type of opportunities we're seeing available for private investments in cannabis that are also specifically in the Ohio geography. And so touching on valuations first, right? The same dynamics that we're talking about more broadly with cannabis in terms of how there's just less pools of capital have hurt not just the access to private financings, but also to public financings, right? So one of the biggest issues for public cannabis companies in the US today is that because it's still not federally legal in the US, they're not able to list on the NASDAQ or the NYSE, right? So instead, they've had to turn to this exchange called the Canadian Securities Exchange up in Canada, which allows for US plant touching businesses to list. It's just a much less efficient, much less liquid exchange. They still do have much less stringent requirements for reporting than the SEC does. So there were some, there are just a lot of companies in the early days that went listed on the CSE that were cannabis related that should have never been public companies. So all these dynamics have just continued to hurt the availability for these public US cannabis companies, even though they're the biggest ones in the country, to really be able to access much institutional financing. And so we see that on the CSE today. We think that less than 2% of the floats of these big cannabis companies like the Curaleaves, the Trulieve, the GTIs of the world, only about 2% of those floats are coming from institutional shareholders. And so to Pete and Mike's point, we expect that you have very significant multiple expansion built into a lot of these securities once you see some real regulatory momentum open up for these securities. And we think that while safe banking, as it's currently drafted, would not allow for them to uplist to the NYSE or NASDAQ, you could see an amendment to that bill as early as next year that would enable that. And so that would be a very big driver, I think, for both valuation uplist for the public cannabis businesses, but then that also naturally trickles through to the private investments as well. So it would really just be a good boon for the industry overall. And then here you can see on the right side of the page, a little bit of an overview about how multiples in the cannabis industry trade at a pretty significant discount to alcohol and tobacco, despite the fact that they have much higher growth rates. And a lot of this, we believe, is driven by the fact that most institutional investors still cannot access cannabis today. So I'll let Pete talk a little bit more about some of the specific licensing dynamics in Ohio, because we made a recent investment in Ohio single state operator called Pharmaceutical RX, which Pete led that transaction. First, why don't I give you a little bit of an overview on another company that we invested in back in December of last year called PharmaCann, and this was a deal that I'd led. So PharmaCann is now the largest private multi-state operator in the industry. So when you talk about multi-state or single state operator, what that means is when you have a license to operate a cannabis plant touching business, right? Be that a grower or a dispensary or a distributor, or a branded product, you have a license to operate in a specific state. So even if you then go out and replicate and have more dispensaries in, say, Ohio and Pennsylvania, because it's not yet federally legal, you're not allowed to move any product across state lines. So you effectively have to replicate your entire, your entire ecosystem in every state in which you operate. And so this is one of the big operational challenges that has presented itself to the folks working in cannabis. So anyway, as I mentioned, PharmaCann is the largest private multi-state operator in the nation. They also have a very large exposure to Ohio with doing over 35 million in revenues here. They have a large cultivation facility as well as numerous dispensaries actually in the Cincinnati area. So I believe one of the PharmaCann dispensaries is actually over in Kenwood. And so we really like this investment opportunity because of their existing state exposure. They're one of the leaders in Illinois, which is one of the largest rec use markets today. And then they have great exposure to a lot of states that are medical today, but have large populations. And so we expect significant revenue upticks as those states transition to the recreational market and open up for more consumers. So like I said, they're in Ohio, also Pennsylvania, New York, which recently legalized recreational cannabis and is going to start sales in January of 23. So really excited about how this company is shaping up. And so this is, I think, is just a good example of kind of what you can see on the larger end of the plant touching side of the cannabis industry. Now, Pete will touch on Pharmaceutical RX, which is a single state operator specifically focused in Ohio.
Yeah, thanks, Jordan. So moving over to FRX, and I believe you guys are going to hear from them in a week or two. The lady who runs FRX, both Ohio and Pennsylvania, it goes by the name of Rebecca, incredibly talented individual with a background running a bunch of different medical clinics, was originally a a prosecutor for the state of New York. But she's done a really great job so far in both Ohio and Pennsylvania. So FRX, let me touch on the key points here. So first off, Ohio is widely believed to be by some of the most sophisticated cannabis investors is one of the top states from a regulatory standpoint if you're going to invest in cultivation and retail in any state, right? It's important to know that given the idea that interstate commerce, of course, is not allowed, every state kind of acts, I always say, almost as its own country, its own regulations, its own laws. In Ohio, you have an interesting scenario where you have two tiers of licenses. Tier 1 licenses, there's only 20 total. Those are fully vertically integrated. They can grow up to 75,000 square feet with a Tier 1 license, so there's 20 of those. Tier 2 licenses, there are several. They just issued some more. And you can grow up to, I believe, around 12,000 square feet with a Tier 2 license. So as you can imagine, in a medical state like Ohio, if you have a Tier 1 license, you really have, you know, as a kind of a default access to 1/20th of the state's medical patients in this case. But in end of 2023, when we expect Ohio to formalize a rec program, all that recreational sales will still go through the 20 Tier 1 license holders, and then of course some of the Tier 2 license holders. So the ability to have a Tier 1 license in Ohio to grow and produce cannabis at that scale, we believe is just incredibly valuable. And when you look at an operation like what FRX has put together, it's really impressive. They have an excellent proprietary organic growing method. They have quite a great following and great brand equity behind their products. They're kind of looked at as premium, very pure organic products. And they make a number of different things, right? They make edibles, chocolates, gummies. They're working on even stuff outside of that, right? Maybe mints eventually. But anyways, today, FRX, to give you guys just a picture of what this business looks like. Last year, they did about $2 million of revenue. A lot of that was processing revenue in the state of Ohio. Now that their facility, state-of-the-art facility is completely constructed, they have cannabis up and growing out of the ground. They're actively harvesting it and of course selling it and generating significant revenue. So as of last year, it was about 2 million in revenue. This year, we think it'll be, call it 15 or so million. And next year, when Rebecca has more square footage come online that she can legally grow cannabis, we expect that to be somewhere in the neighborhood of, you know, call it 25 to 30 million. So you're taking a business that's 2 million last year, and next year we expect to produce up to 30 million or so. Over time, we believe she can really scale this up to 40, 45, even 50 at one point once she's fully built out all her square footage, all 75,000 feet. And one thing I failed to mention is she also has 2 dispensaries, so enabling her to really capture an impressive margin on the product that she grows. So let me just pause there then, Jordan, and given I've been rambling.
Great. It looks like we've got a question from Brian.
Yeah, just a business question here. We all know on this call what vertically integrated means. What does it mean in the scope of this business? How high and how low is integration?
Yeah, that's a great question, Brian. And the definition can vary from state to state, but when we talk about it in cannabis, typically we're talking about it from seed to sale, right? So that would be from cultivation, distribution, and then end sale at owning the dispensary location. A lot of players who are vertically integrated also would sell their own brands of edibles and vapes, but that's not always the case. So I'd say typically you're talking about cultivation, distribution, and retail. And it's really important in particular for the cannabis market because different states have issued different licensing regimes, right? Where some have issued a limited number of licenses, some have issued unlimited licenses, some require you to be vertically integrated, some say you're not allowed to be vertically integrated. So depending on which category your state falls into, that means it's more beneficial either for the companies or for the customers in that state.
And to add on to Jordan's point there, and just to explain what's so great about the state of Ohio from a cannabis business perspective, is Ohio is kind of the ideal full vertical integration license that people really want, right? As an investor in particular. So if you have a tier 1 Ohio license, you can cultivate, you can process cannabis, turning biomass into oil and other things, which FRX does. You can have up to 3 dispensaries. FRX has 2, and you can sell your own and create your own branded products. So all the way, as Jordan said, out of the ground, process into products, cut into flower, put into a dispensary you own, and selling your own products and capturing the largest margin you can. So they've been very stringent and clear that they're not going to be issuing more tier 1 licenses. It's a conservative program, if you will, in that respect. So the people who do have those licenses are in a very fortuitous spot.
Thanks, Pete. Looks like we have a question from Harry. Oh, Harry, I think you might be on mute or having trouble hearing you. Maybe you can insert your question into the chat. In the meantime, Jordan, you were going to touch back on some points on the Ohio snapshot.
Yep, exactly. So this is what Pete was just alluding to in the sense of why we think Ohio is such an attractive place for an investment, right? And why we put not just the FRX investment, but also obviously PharmaCann. We attributed a good amount of our value for that one was the Ohio assets. And so a couple of things that make it more investor friendly. Number one, obviously it's got a huge population. I believe it's the 6th largest in the country. Number two, because they require you to be vertically integrated, that makes it so that having one of those licenses becomes more valuable because you can own everything end to end. And because it's a limited license market, there's, I think, what was it, Pete, only like 22 tier 1 cultivation licenses?
20, right?
20, yeah. One of the other benefits of the structure in Ohio is that of those 20 tier 1 licenses, you can only grow up to 75,000 square feet, and that's your cap. So for FRX, who's a little bit of a younger, newer company, harder to find capital, she's able to compete just as strongly against players like Green Thumb Industries, one of the largest in the entire country, because they're both capped at the same number of cultivation canopy as well as the same amount of dispensaries. So that was, again, a thing we liked about the Ohio market. Again, it's also because it's not yet recreational, right? So we naturally see once a state flips from medical to adult use, that you naturally see a very significant increase in revenues and demand for the product. And even the medical market in Ohio today, it's very restrictive because it doesn't allow for a number of qualifying conditions such as anxiety, which other states do. And so because of that, it's actually more challenging to get a medical license in Ohio relative to other medical use states.
Thanks, Jordan. Looks like we have a chat from Harry. I have a friend who is an owner investor in a cannabis company called Cresco. I have friends from college who have told me I should invest in his company. I've not done that yet, but I did understand you to say that you can't invest in companies via the US stock market and had to do it via Canada. Can you clarify?
Yeah, that's a great question, Harry. I'm actually an investor in Cresco myself, so think highly of that business. It depends on your broker. Most of the bigger brokerage accounts will be able to buy CSE listed securities that are big enough, right? So Cresco would probably be on your account. I don't know if it's like a Vanguard or Fidelity, but like I use Vanguard and those companies are available for purchase there. So from like an actual processing of the transaction standpoint, it shouldn't be any more difficult. The security that you're buying itself is actually just listed on a Canadian exchange. And so because of that, a lot of traditional institutions just don't have the back end infrastructure to do that, or because it's not a major exchange, they just institutionally refuse to buy any of those securities. So it's more of like a technical thing for larger institutional investors. Shouldn't really restrict you as on the retail side as much.
And I'll add, Jordan and I and our whole firm is a big fan of Cresco, Harry. Cresco, I'm based in Chicago. I think I left that out. Cresco has about 70-ish% of the market in Chicago. So really any dispensaries you walk into, you see Cresco products. You walk into or walk past a lot of Cresco dispensaries. I think they've done an excellent job on the branding front. They're great when it comes to cultivating cannabis and whatnot and license acquisition. We continually see them as one of the leaders in the pack, if that's helpful to you. Oh, cool. So Kristen worked for Cresco here for a year and a half. Okay. Kristen, I hope my comments you agree with.
I'm smiling.
Oh, great. Okay.
Great. We have a question from Greg Forte.
Jordan and Pete, earlier you mentioned that in the cannabis industry nationally, about 15% of it is funded and 85% unfunded. Of that 15%, is the majority of that medical, or is there a split on that between medical and recreational?
Yeah, that's a great question. So on the investment side, I haven't seen anyone who's really parsed through it that well. So I don't have a great answer for you there, but I do think, let me see, does this slide have it right? We might not, we used to have a slide that had the split between adult use and medical. But so on the actual consumption side, I want to say it's something like 70-30% adult use, medical. Does that sound right to you, Pete?
Yeah, exactly. I'd say a couple of things. One, medical cannabis, right? When you look at how it's progressed over time, it's also another funky thing with the industry in the sense that the states often develop a medical program, which is somewhat limited as a stepping stone to a rec program. However, over time at Key, we believe, even though it goes in that direction, today, really the greenfield opportunity is in recreational cannabis. Over time, as they're able to study the plant, as they're actually able to put it in certain pharmaceuticals, understand its real effects on people, all of that's still largely unknown. But as that research progresses, I think we're going to see lots of development on the medical side of cannabis, just a little bit more down the road. Right now, recreational cannabis is where the greenfield opportunity is. And then I believe, Greg, I believe you also asked about funding, which medical versus rec, which is what percentages, right, are of the funding that is available are going to both. I'd say a large percentage of the funding available to cannabis is very interested in recreational cannabis at the moment. Now, that being said, I will say this too. Take FRX for an example. A lot of people like us will invest heavily on the medical side of things because we know in a year, maybe 2 years, it's going to be recreational. So the line kind of blurs in that sense.
Got it. Thanks. That's helpful.
I have a question here about the use of the taxes from the sale.
Yeah.
In some of the more developed markets, what are those earmarked for, if they are at all?
So
go ahead, Jordan.
Yeah, I think we're gonna ask the same question. Could you just clarify that when you say taxes for the sale, are you referring to selling stock?
No, of the retail sales in the dispensaries,
Oh.
what are the
Where are the tax revenues going?
Yes.
For sure. It's a great question. And
Yeah.
the short answer is a lot of different places, and it depends on the state. A few examples of that is you take something like, more often than not, when cannabis bills are passed through into legislation, there's often we see an element of those dollars being used for some type of greater good to kind of balance the fact that today a lot of people kind of still look at cannabis like a drug or a vice. So in Colorado, we saw it go into the school system. In New York, I think we're going to see a lot of it go to social justice related things. I think a big thing, and it's actually important to us too, just the huge unfairness of the fact that today there's people behind bars for being caught with cannabis 3-4 years ago, 2 years ago, and then now it's legalized. You have people making millions of dollars off of that. So I think some tax dollars will go through reform of some of those righting some of the wrongs in the past. But Anthony, it's really state to state, right, where the dollars go. And when we see federal legalization, I'll also say this: the number one thing I think that's kind of an impediment to it today is really it's widely supported on both sides of the aisle, right? But why isn't it passed? It's going to be a lot of tax dollars. People are trying to figure out, they can't agree where those tax dollars need to go. So,
yeah.
Thank you.
And I think just for like a point of reference, I want to say that Colorado in the first 4 years or so of legalization of rec had generated over $1 billion in tax revenues. So very meaningful dollars.
So we also are opening the floor. Any questions from the participants? Feel free to either raise your hand or unmute, and Pete and Jordan are here to answer any questions you may have.
I'd also add too, for everyone's benefit, I know you're all going to be hearing from Rebecca and FRX, I think a couple weeks from now. That's really an amazing deal. We couldn't be more excited about it. And she is actively fundraising. So to the extent you're interested in what she's doing and it's right in your backyard, you'll certainly be able to ask her questions and learn about everything she's doing. But that's a fast growing business, and she has one of 20 licenses that can do what she does. So it's an incredible moat.
Yeah, and on that point, I would just highlight, I think it was Harry was asking about Cresco earlier, and Cresco Labs, for those who aren't familiar, is one of the largest multi-state operators in the industry. They recently announced an acquisition to acquire Columbia Care, and through that merger, they'll become the largest cannabis company in the industry. Because of regulatory reasons, there are some divestitures associated with that transaction, and one of those is the Columbia Care Ohio business. The reason I bring that up is what we know is that that's the most valuable business that's being divested as part of that transaction. So it's a good reference point for us to know how valuable FRX will be once we're ready to sell the business to a larger aggregator or take her public, or whatever makes sense.
We have a question here from Karen. Recently, supply at the dispensaries have been very low. Is this a supply chain issue?
And
Yeah.
Karen, Karen, are you talking about Ohio specifically or nationally?
Yes, Ohio specifically.
Ohio. Sure. No, it's here's the thing is, Ohio, the medical program is relatively new. The tier 1 license holders, the way it works is you start with 25,000 feet of canopy square footage that you can grow each calendar year. So every 12 months since you kick off your grow, you get an additional 25,000 feet. So right now you're at a point in time, Karen, and this is what makes what we love so much about the FRX business is you have so many people in the state of Ohio, and you have people just furiously growing cannabis, only 20 who can really do it at scale to satisfy that demand. So as I say with the FRX business, demand is not an issue at all. That's not true in a lot of states, right? Demand is not an issue at all today. it very much outweighs supply today. You will see that catch up here, Karen, as you know, simply it's a crop, right? People needed time to grow it. And currently it's flying off the shelves faster than people can grow it. But in the coming months and years, you'll see that the supply certainly catch up with the demand. Oftentimes we even see it overshoot the demand a bit. So you got to be careful of that as an investor. And then what you'll see is prices start to come down over time, like you would with anything with a commodity-like characteristic.
Yeah, thanks,
Jeremy, can you
Pete.
hear me now?
Yep, we can hear you.
I had to be my own computer consultant. They hooked me up to a new computer yesterday, so I didn't have a microphone or speakers.
Okay.
I just had another question. I've been seeing a lot of stories on the news about a high percentage of cannabis that's getting into dispensaries is illegally grown. And is that is that a really big problem? And is that going to be, create some problems for some of these? I mean, I just don't understand why they wouldn't know if it was illegally grown. It would seem like there would be legal growing facilities. But I just saw like recently in the last couple of days, there were some articles about it being illegal.
That's interesting. And that's again specifically in Ohio.
No, this was like NBC News, CNN News, something like that. I can't remember which one I saw it on.
Jordan, maybe talk about that. I'd say real quick, Harry, it's once again, as with everything cannabis, it's very much state to state, but Jordan's been deep in the California market. He's actually out there now doing diligence. Jordan, why don't you talk a little bit about the dynamics and even the deal? It's kind of interesting just how that works.
Yeah, for sure. No, it's a great question, Harry, and it's some of the interesting dynamics you see with cannabis for sure, right? And so as you think about the supply of biomass, right, in most markets, in most industries rather, you don't compete with a black market because you don't have a strong black market. You don't need a black market, right? But because in cannabis there's still so many states that are illegal, there has always been a thriving black market. And so some of the things you've seen in California, which historically has always had the biggest black market because it's got favorable climate, it's got better, I think, generally coverage from like DEA cameras and that kind of thing. So it's always had a really strong market. And so when you've seen California come on with the oversupply of cannabis over the last year on the legal market, that's really suppressed prices across the board. And because taxes and all the infrastructure to make sure you're doing everything compliantly makes operating on the legal market, you actually can have a cost disadvantage. It makes it so that, in a time of compressed pricing, the black market's able to be really strong. And so, yeah, you've unfortunately seen some of that flow through to other states as well. Hopefully, as the industry continues to shift from the black to the legal market and people have more access to supply on the legal market, and also some of these overly taxive legislations can go away and make the legal market more cost competitive to the black market, you'll start to see that shake out more and more. But it is a very real and important element that we have to think through with the industry today.
And I'd add to that, Jordan, too. We even see California. It's funny, right? California, look, there they are in '96, the first one, yet they still haven't figured out a way to do this very successfully. Whereas you have a lot of these states over on the right-hand side that have legalized, 2018, 19, 2020 and beyond, that figured it out very quickly and have super robust programs. Like Colorado is a perfect example, virtually non-existent black market. We do track all this, by the way, with our data and whatnot. Virtually non-existent black market. Illinois is an example of high pricing, but well-regulated. There's still black market influence, but it's nothing comparative to California. And just an interesting fact, you even see in the PharmaCann deal, we saw one of the issues, right? Not a big issue, just an interesting point. You'll see California legal brands make their way all the way over to like a New York. They'll be popping up in New York. So you see, certain items produced on the black market are still kind of going across the nation like they did. So it's state by state, but it's also inevitably in the black market, not always state by state. So it's just an interesting dynamic there.
Yeah.
It will regulate itself over time, though.
Yeah.
Okay.
Yeah, and Kristen, it's a good point you mentioned with your experience of black market being impossible. And one of the things that the legal markets are trying to do more and more is ensure a very clear movement of the supply chain from seed to stale, right? And verify that you got it tested and that you have all the testing from a certified lab before you sell it, and that you actually have a system called metric that traces every single plant back to its initial cultivation point. Now, of course, I'm sure when times are tough and people are coming off of the legacy black market, a lot of times they'll cut costs or, cut corners where they shouldn't be. And so I'm not surprised that there's some folks that are doing that. And, just again, one of the reasons you got to be really diligent in this industry and making sure that you're only operating with the folks that are in full compliance with the law.
Thanks,
Yeah,
Jordan.
And then
We have another question here from Todd. What are the drivers for states to legalize? Who are the people leading this endeavor? Maybe you can do kind of a historical and then more focused on Ohio.
Yeah, it's a great question. I think historically, it definitely was more of the left-leaning states that started the legalization movement, right? So like California, Colorado, Washington, Oregon, right, were some of the first ones to move. But now I think you've seen enough widespread adoption and support for cannabis legalization across all demographics. As I mentioned earlier, right now, the vast majority of Republican voters also support at least medical cannabis legalization. You've also seen one of the fastest demographics for growth for the cannabis industry has been elderly consumers, because they use it for pain treatment and that sort of thing. And that's also, I'd say, been a demographic that historically votes more Republican. And so all of those effects have made it so that you're really seeing more widespread support for legalization across all states. And then, what are the drivers for states to legalize? It's a good question. Definitely making sure that there's the right balance of opening it up for industry, but also putting in social equity provisions to make sure that you can right the injustices that the war on drugs have done in the past. I think candidly, another very important driver of legalization is, what does the state's budget look like, right? And so that's why we think the industry as a whole is recession resilient, if not counter-cyclical, because in times of recession, you'll see states more inclined to generate additional tax revenues any way they can. And so legalizing cannabis is one effective way of doing so.
Yeah.
With regards to Ohio, I'm not as familiar as who specifically is leading that. I know that I think Nick Lachey was involved with one of the legislation that tried and failed a couple years ago. There's some other big folks that I recognize, but I can't remember, offhand who was part of that bill.
And they did in Ohio, to so everyone's aware, get enough votes to put it on the ballot. That'll be in November of 2023. Given the polling and the support, I'd be surprised if it was not legalized by 2023. And to add to what Jordan said, just about what are the drivers, right? There's kind of a couple intricacies that are very interesting. Certain states, it's really a domino effect. I really mean that. When you look at state by state legalization, you take certain states, right, that are surrounded or even just bordering legal cannabis states, then the state that doesn't have a program kind of gets put in a pickle, and they have their hand forced a bit. The choices kind of become this: you're going to have legal cannabis coming in over the border from the state next door. The question is, are you going to continue enforcing and spending money on catching cannabis criminals or people who use cannabis illegally in your state market? Or are you simply, rather than pursue that route, are you simply going to legalize it, have a program, collect dollars from people who are going to buy it anyways, and at the end of the day, make money off of it, so as a state? So there are a lot of incentives to legalize cannabis for any given state, and the more states that actually legalize and the more that critical mass builds up, the greater those incentives get. So that's kind of the state of the cannabis industry right now. Everyone's looking to their left and their right and saying, well, these two states did it. What are we doing here? We're trying to catch people and spending money on that. So it's really a domino effect, like I said.
Another question from Todd: will the FDA stamp of approval only happen with national legality? Are legal states taking on the role of establishing standards and testing?
Yep. Yeah, that's a great question, Todd, and you're spot on with both the questions. So yeah, the FDA will only be involved once it's approved legally, and we've already seen that happening with hemp because that was legalized nationally in 2018. And in the interim period, the states are taking on the role and responsibility of establishing testing standards. And that's one of the things that, again, makes cannabis unique, right? As you can see, pretty vastly different standards and requirements for testing across various different states. I spent several months of my life trying to make an investment in the testing lab space, and ultimately we didn't end up getting there. But it's definitely an important part of the industry, and states are figuring it out one by one. But yeah, it won't go up to the FDA until federal legalization.
I've got a question here. What should startups know that are interested in this sector, and what are the first steps they should take as they're getting started?
It's a great question. I guess my question back to you would be, are you a startup that's specifically looking to be a plant touching business? Like what type of business? Is it cannabis specific, or are you looking to just service the cannabis industry?
Let's say it was, adjacent farm style business.
Okay. Yep, that makes sense. I think understanding the regulatory dynamics for sure, right? That's going to be first and foremost, because that is where a lot of the idiosyncrasies and complexities come into with cannabis. And so, I think if you're looking to be involved in any type of like distribution of the product, right? Obviously knowing that you can't cross state lines with it, that's very important. Now, if you're more of like a business services or tech related business helping to facilitate cannabis, then you don't have those same types of restrictions, right? And that's why we've seen, and why First Fund, frankly, was a lot more focused on tech investments, is just they have a lot more nimbility and flexibility to operate in this kind of complex, capital constrained, regulatory challenge, state by state market today.
All right. Let's see. Here's another question that was submitted about, have you heard of any discussion about any specific kind of government programs that may benefit from the legal cannabis industry?
Yeah. So can you repeat the question about this types of
Has there been any discussion of specific government programs that will benefit the legal cannabis industry?
specific government programs? I'm just trying to think what that would be.
Like beneficiaries maybe of the tax dollars, Jordan?
Yeah, that's kind of getting to that question we were talking about earlier about, where is the tax revenue actually going? And we've seen a lot of states choose to put a lot of that money towards education. A lot of them also not enough of them, unfortunately, as should have, but more and more you're seeing states focusing on social equity programs and other initiatives that are targeted towards helping to fix some of the injustices that have been done by the war on drugs over the past 50 years.
We have a question from Karen. Have any states authorized cannabis coffee shops where people can buy and also consume cannabis, similar to Amsterdam?
Yeah, that's a great question, Karen. So none of them have enabled it where you can do both in the same location, but some have started to say you can have social consumption lounges nearby. And so there's one in Denver here where the company actually owns both sides of a building. On the left side is a dispensary, and then you walk across to the right side and can consume it there.
Yeah, I'd add, it's a question we've asked a lot too, and it always comes up, at what point can I walk into a little cool cafe and buy a joint and an iced tea or a cup of coffee? I'd say this, it's developing. Right now, it's kind of priority number 3, if you want to call it that. Chicago has issued some, I'm sorry, Illinois issued some social consumption license, like Jordan has said, but largely unlike Amsterdam in the sense that these are very much, and we haven't really developed the conclusion on these, have we, Jordan? But it's not like as much of a experience almost as you would want it to be. Today it's kind of ended up as this, you got the dispensary like Jordan said, and then you can kind of have this area of the dispensary or other half of a dispensary where, you know, you can go and buy drinks, not alcohol, but, you know, drinks, and you can smoke or use cannabis there, and different TVs and music and stuff like that, but nothing that's really we've looked at and said, wow, that's a major business. And they've certainly done a very hard line in every state of anything to do with, we get the question about, you know, bars and cannabis and alcohol and cannabis. There's been a very consistent line drawn in states of not doing those together and keeping them fully separate.
We have another question about the technology. Could you speak a little bit about what are the most recent advances when it comes to tech-enabled cannabis businesses?
Yeah, that's a great question. So we have definitely done a lot of work in the tech space on the cannabis side. Today, there's 3, I'd say, of a size that are on that are pretty meaningful, that are traded on public exchanges. So that's Spring Big, Weed Maps, and Leafly. Spring Big is one of our portfolio companies. They are more focused on marketing and loyalty solutions for customers. So if you think about like a Twilio business model, very similar to that. Weed Maps is more focused on generating. It's almost like a Google Maps platform, but specifically for dispensaries. And a lot of the benefit of this has been because Google and other traditional, you know, players won't let you show where your location is if you're cannabis related. Weed Maps will. So that's a business that, you know, has done really well, but we've had concerns just about the sustainability of that revenue over the long term. And then Leafly is more of like a platform that aggregates all kinds of digital content about cannabis, and then they generate revenues from ad placements. And then outside of that, you know, you've got all different types of tech companies. There's a couple that are focused on e-commerce. We think that's going to be one of the big sectors in the industry long term. And so we've taken a deep look at some of those players. They're all private still today. Data analytics, we're invested in the largest data analytics business. Pete's the chairman of the board of that company. It's called BDS Analytics. Outside of that, you've got some fintech solutions. Those have the potential to be just game-changing, you know, massive investments. But on the flip side, they're very kind of binomial. You know, either you kind of crack the case on how to facilitate payments legally, or you don't, and the company doesn't work. So those are some of the main categories. Pete, any you think I'm missing offhand?
No, you know, I think those are all good examples, Jordan. I'll just add to what Jordan said, and you have a very interesting. It's what we love about the cannabis market when we first got into it in particular was you have this whole ecosystem of tech businesses that are filling a void. The void being created by, you know, cannabis plant touching businesses. A lot of the existing tech companies won't work with them. That's changing slowly. But anyways, today you have this void where cannabis data analytics, what is that? Well, there's no data on cannabis, right? Without the company that we're invested in. You don't know, how is a branded product supposed to know who's buying their product, how they should price their product, demographic trends, you know, competition, what new products are coming about that they didn't know about. So a company like BDS's came, filled that void. Jordan brings up customer loyalty and text message marketing, where we have an investment in a company that does affiliate marketing and programmatic advertising for cannabis businesses. So think, you know, you go on to healthline.com and Google, I have joint pain, and a little CBD ad banner pops up that you click it and you end up in Charlotte's Web. You end up on their online store. This company gets paid for finding the customer. So you have all these little niches within cannabis, in particular cannabis tech, that are largely unserved. And so these cannabis businesses have popped up. started serving them, and we've actually funded a lot of those businesses.
Yeah.
Awesome. We have a question here from Nick.
Yeah.
Hey Nick, what's up?
Hey Jordan, good to see you again. Thanks for letting me
Yeah.
join. Saw this on LinkedIn and wanted to pop by. So question, I think the tech companies are largely non-plant touching. I'm also curious about non-plant touching businesses that are in more traditional services, maybe like packaging. If you could talk about what's going on that side of the market.
Yeah, that's a great question, Nick. We've looked at some packaging companies. The reason we didn't get comfortable in that sector specifically was we felt that the traditional players in packaging, like some of the folks like Berlin Packaging and others, didn't have as significant of barriers to getting into cannabis as some of the other ancillary sectors. And so we felt that they're just, we're better sectors to focus on. Another sector though, business or like, more services that we've really liked has been specialty finance. And so we made 2 investments in our first fund into specialty finance providers. One's a company called Excess Financial. One is called Sweetleaf Madison Capital. And those guys provide equipment financing to cannabis businesses. Very simple business model, but and you obviously see it in all types of industries outside of cannabis, but for all the reasons that venture capital financing is constrained in cannabis, equipment financing is also very constrained. And so those have proven to be really great investments on our standpoint so far. They've also proven to be very counter-cyclical because in down markets, capital becomes even more scarce and their product becomes even more highly demanded.
Great, thanks. Any other questions from the participants for Pete or Jordan? All right, well, thanks again, Pete and Jordan, for joining us today and sharing all this knowledge about the cannabis industry. We look forward to, chatting with Rebecca in a couple weeks.
Great. Fantastic. Yeah,
and
thanks
again
everybody.
to all the participants.
Yeah, thanks for everyone for joining. Please don't hesitate to reach out with any additional questions. And yeah, I hope you all are able to join back in for Rebecca's presentation. It'll be really exciting as well.
Absolutely. Thank you, everybody.
Cheers, everyone.